An amazing day today. So in this video, we're going to be going over the top companies converting from Bitcoin miners to data center power. And we were actually trading a data center company this morning. We've been watching it in our live sessions here in Stockmate. If you ever want to tune on in, see my entries and my exits, and surround yourself with like-minded individuals, it's going to be the second link in the description below to join Stockmate. Now take a look here. We were just trading TSSI. We've been holding this one for just a little bit here. It's up about $417 here on the day. Saw a really nice 9% gain over on TSSI as we've been building a small position over there. We also were trading some BigBear AI today as well, which we would go into, but we're going to keep it focused here on the Bitcoin miners and the shift to the data center market. So how's everyone doing? So something that a lot of people don't see coming is the potentially a large supply shock to the data center markets. I mean, right now demand seems to be really high, but you have companies like, for example, IREN, you got EPLD, WULF, and BITF converting into these from data center or from Bitcoin to data centers. So really quick, I wanted to do a quick breakdown here on EPLD along with some other companies, as we have been following them pretty closely over the last few weeks. Hey, what's going on, Lee? How are you doing today? Things going well for you? So we got this consistent uptrend happening here on EPLD. They did reach this 65% increase up to this high of $40 a share, and then pulled down from $39.50, not fully 40, but $39.50, back down to this EMA here around $37.90. So with APLD being where it is, we're going to watch, see if they hold above $35 a share, as they potentially could sell back down. That is a level actually even closer. You got that previous resistance acting as a support at 35, but you also have this previous resistance acting as a support potentially around 37. So they're currently at 37 right now after pulling down from 39. And they're at this kind of all-time high around $40 a share. So we'll be watching here as there's a resistance level. The market is growing fast. In fact, you can kind of pick it up, Bitcoin miners to data center plays. And you see a pretty large pivot, okay? A couple articles here. Bitcoin miners are increasingly pivoting to AI and high-performance computing HPC data centers to capitalize on a surge in demand for compute power and offset falling mining profits. This strategy shift involves repurposing existing infrastructure for more stable, high-margin contracts with major tech companies like Amazon, Google, Microsoft, and actually a lot more than that, investing in the companies. So massive AI demand. You got the AI arms race created in insatiable demand for energy intensive data centers capable of training large language models. You got a few companies to watch here. You got CORZ, you got HUT. We just went over a top 8 Bitcoin to data center list a few days ago. So if you missed that, make sure to go have a look. But you got some of the top companies here included in the shift could be found in our data center list. David, how are you doing today? How are you doing? Let's go. And so what you could see, again, APLD, we see things surge. We talked about it this morning. Very nice surge. But what you do, why I wanted to make this video is because while the data center market's growing really fast, AI market's growing tremendously. We have more demand than we've ever seen in the history of AI. You still have a large influx of new companies that are entering the data infrastructure AI market. Now, as the new companies continue to grow and jump in on the hype, you're also seeing a potential correction because of the large supply. Now, there are, generally speaking, a lot of the data center companies are fairly safe. One of them could be APLD because of the contracts that they've signed earlier with CoreWeave and other large AI companies. And you see the same kind of moat for APLD as you do for NBIS, Nebius there, along with Wolfstock. They signed, $9.7 billion contract for IREN, close to 10 billion, if not more, for Wolfstock related to Google. BITF might have some trouble with the conversion because what you have is the companies that converted earlier. We'll just have to see how large the demand for the AI is. AI demand is huge, obviously, but is there enough demand that you have dozens of companies moving from the Bitcoin, right? The Bitcoin mining over to the data center markets. Some of them got early capitalizations. You could include, APLD with 15 billion in their pipeline while their market cap's still at 10 billion or what have you. You could include NBIS, and you could include definitely ANET, IREN, and obviously AMD is in a really good spot into 2026. CLSK is in a good spot. But some of them, BITF, for example, you look at BITF and their thesis is that they are a Bitcoin miner. They've sold off tremendously from about $6 down to $2.30. They've pivoted towards the AI market. Good evening, Matt. How are you doing today? And they're recovering with targets up into this $3.45 range. It's a 21% increase, even potentially up into this $4 to $5 range. I think we're safe in the short term in that these Bitcoin miners in their conversion are still early enough that their infrastructure will be used and secured by big tech because the demand is still high and there's a lot of building of these data centers. But in the longer term, or I guess you could say like medium term, like next 6 months to 1 year, I wonder if we get into any maturity around the data centers in their deployments, that there's an oversupply in any instance about 6 months to a year from now. Right now, we're still in undersupply mode. We're still in high demand. Demand's not the issue. These companies are seeing large growth. And a company like Bitfarms, BITF, has that ability to offer this infrastructure, these miners with newer miners, which we've researched already, to not miners, GPUs for AI infrastructure for big tech. Now, that's something. So right now they're okay, but wanted to bring to your attention, it is a factor. There's no slowdown in usage from AI, but it is a factor that you're starting to see the larger data centers get built. So much supply, so many companies moving from the Bitcoin markets into the AI markets that now it's like, whoa, we're getting a lot. I wonder what's going to look like 6 months from now, a year from now. Do we have any oversupply? And I would cover Mara, Tyler. The only thing about that stock, Mara, is that they were selling their own stock quite a bit, which, basically the investors were the liquidity. And when I saw that, I stopped covering them for a bit because of that. And ideally, I'm looking for companies that really have the good intentions and integrity with their shareholders. It's just really important. So I'm not going to cover it right now unless something's changed in their transition to a data center model. Yeah, I mean, they're transitioning. I don't know that they've secured any deals. We could take a look, I guess, see if they have any new deals. But I remember the first time I looked at them, I just, immediately saw that they were, investors were the liquidity, meaning they were just selling their own shares, quite aggressively. And yeah, they raised a lot of money, but didn't really see too many anything that really showed signs of growth in the conversion to AI infrastructure. If you pull up Mara, for example, M-A-R-A, Tyler, M-A-R-A here. Let's see how it looks over the last year or so. Yeah, it's okay. Yeah, this was what they did. It was right here, 2021. You saw a lot of manipulation, kind of like a pump and dump, right? They surged up there, $83, sold back down. I just don't follow pump and dumps. See, they've had a history of it. Look at that. See that right there? Boom. Shot up. A lot of shareholders really excited. All the hype, I mean, I don't know if they pay companies for it, but if you search like Mara stock on Google, it's like there's Simply Wall Street, Timothy Sykes, MarketBeat, Timothy Sykes. They're all, hyping up this Mara stock every minute, right? But it's highly manipulated. So even if they did have some real value to the marketplace, I'd be hesitant to cover it, honestly, because I just want to keep the integrity with the stocks. So yeah, so like a company like APLD, for example, they've had their shares of, growth, but overall the value's been building. We see them, build the value. And that's kind of what we like to see in some of the data center plays. So that's kind of the approach there. It's not that I'm not going to cover them ever again, but right now the value is just not there, and the manipulation is I mean, the value could be there, but the manipulation is really high. So hopefully that makes sense. Just want to keep it straight up for everybody. Don't need any pump and dumps, really. Johnny, how's it going? How are you doing? BITF? Yeah, exactly. It's funny with BITF because they haven't announced any large contracts for the conversion to the data center markets as opposed to the Bitcoin. And when I look at the press releases, they have some other third-party articles, but we haven't seen, any new releases that indicate that they're now making big gains in the AI market. So Bitfarms is kind of lagging. They also disappointed slightly on their last earnings. However, they're targeting up to about $3.50, a 21% potential increase from here. So we'll be watching, see if they make that move over the next few days. But we were trading TSSI over the last few days, and we'll be watching this one. We got a little trade going there. Joe, Mara has a choppy chart. Yeah, they do have a choppy chart. That's for sure, Joe. David, good evening. How are you doing? Kate's, what's going on? How are you doing today? Yeah, I mean, BITF seems undervalued for their current chart. One thing to consider when you look at the financials of BITF, 2.3 billion or 2.5 billion dollar Canadian, not dollar, Canadian dollars. Revenue up 155% year over year. Negative net income. Balance sheet 800 million. They're fairly priced. If we see a increase in revenue as well, they continue to ramp up in the next quarter, and their balance sheet also declined a slight 20 million in their assets. So we'll see if they continue to increase. If so, then yeah, they could have a really nice earnings. Probably, let's say they come out with 80 to 100 million in revenue, which is what we would like to see. Then yeah, they could maybe jump up to that, $3 billion to $4 billion market cap, which would put them, from here, possibly as much as 50 to 100% increase. And, that's kind of what we saw. We saw them sell down quite a bit. They're around that $2 range. So it's worth watching them right now, BITF. We do have them on the list. They've been consolidating, meaning left to right, bouncing between support and resistance here, with the nearest resistance level to watch around 350 right now. So we'll be watching there. When it comes down to the growth in their conversions, we haven't seen any new articles though. So that's why we're just watching. See how they come out with more articles related to the Bitcoin conversion to the AI data centers. Average price paid per Bitcoin, is that for BITF or for another one? What do you think about CLSK? Will take a look. Yeah, definitely. Yeah, we had some Outlookly CLSK, over the last few days. I was anticipating a bounce here around $11.50. They're consolidating right now from left to right. See this move. They're looking to hold above this $11.50 range that they did end up bouncing today. We did analysis yesterday, but they did bounce up today from $11.50 up to $12 a share, with a resistance targeting around $12.60, $12.50. It's kind of next level. Consolidating right now, consolidating. But I do think it's possible they get up into this $15 range. That's a 30% increase for CLSK. They came in with some good earnings, and they came in with a revenue of $220 million, while their market cap's still at about $3 billion. They've been around for quite some time, and they're in the energy space, optimizing megawatts to support our digital world. You can see they're focused on developing land and energy assets that enable the world's largest, most advanced data centers. Okay, adapting power to intelligence. See what they're doing there. And they're moving once again from the Bitcoin miner, pivot there to AI as well, which makes them a solid company to be watching right now for sure. And you can see here that they're also between these levels, the greater trend here, but also they got a support level they're trying to hold around 1150. So we'll see. Once again, the upside's good, but they have to hold that 1150. Their market cap is still low, which is good. And their revenue was up the last quarter. So fair value, maybe they get up into that $13 range. It's about a 10% increase from here. But watching that support, that's about a 2% sell down, maybe for a stop if you're in a short-term trade. Otherwise, long-term looks fairly promising. They've kind of got this gradual increase with even some previous highs around $15 to $20 a share. Pretty large offer of potentially about 30% to 100% if they do continue that trend. So things looking good there. Joe says his favorites are Wolf. Got it. Oh, interesting. That company is moving their HQ to the US. Got it. Good evening. Angela, how are you doing? My favorites are Wolf and CleanSpark, having trading the same ranges over and over. Yeah, so they do consolidate quite often. Yeah, that's what we saw here. So one of the things that you'll notice is while a lot of companies are moving to the AI data center, right, from Bitcoin, it's totally different configuration, totally different setup, same GPUs, but different approach. They're now, renting out their compute to AI companies. And I remember when I first found out that all the data centers were springing up and getting built by these top AI companies. And I remember thinking to myself, well, geez, who's going to wire everything? Who's going to configure this? Like, okay, it sounds easy when you see the announcement from Apple and they're like $500 million in infrastructure for AI, and then you got Stargate, another 500 billion, and then another 500 billion. And you're like, wow, that's a lot of money to invest, but who's going to do all the work to connect all the data centers? I have a friend, I remember he bought a Tesla when he was like 20, really nice car. I was like, dude, what are you doing? How did you do that? He said, I'm just wiring up the some of these server places because it pays really good to be able to do the wiring of the data centers and know how to actually run and set up the compute. Because think about it, like big tech's like, we just need more computing power, but do they actually know and have all the know-how to set these things up? A lot of them do, third-party contractors and things like that, right? And so one of the companies that helps that conversion, whether it's a conversion or it's a just general build, is this company. It's called Total Site Solutions. You can see integrating high-performance computing infrastructure to meet the demand for AI, accelerating the infrastructure behind AI, computing, and they build data. They have data center services in the actual configuration. Now, it's not a fancy website. It's kind of ugly. It's not very pretty. When I click through the website, I'm like, kind of want to throw up. No, I'm not kidding. I'm kidding about it. But it's not like a nice website. It's real interesting with the animations and stuff. But here's the thing, like these types of websites sometimes actually show just more trust, actually, because they're just here to configure. And when I found their financials, TSSI, and I started looking into this company, I really like what I saw. You see, quarterly they were down a little bit in that last quarter on revenue. But if you look annually, you can kind of see this hockey stick where their revenue went from just 30 million a year to 2024, 150 million. So see that blue increase in revenue. And then shortly after, in 2025, they're on track to do over 200 million, 250 million this last year. And their balance sheets also increased. They're now up to 165 million in total assets. So while their assets have increased, their income has also increased. You can see annually kind of like a hockey stick type exponential increase. Their financials look good, right? So 250 million projected in 2025, right? After this next one. And then they got, under equity about 63 million. So over about $300 million they have just like kind of like cash income. And then that's not projecting the next year, but just what they have. So over 300 million or so. But their market cap's currently about 267 million. So their income and their assets and everything is actually surpassing that of their current market cap, which is fairly rare. It's actually something that you look for. I brought this book back to my desk. It's been about 10 years since I've had it, but it's this Warren Buffett Speaks book. It talks about some of the different approaches that Warren Buffett takes, and one of the interesting approaches is that the integrity of the company is so important. In this age, with how volatile things are, even if you're a short-term trader, it's a little bit idiotic not to at least look at the financials, right? And it's so easy not to look at financials because you get caught up in like everybody telling you what to buy and sell. But when you're thinking for yourself, you look at the financials, company like TSSI, to me, it makes a lot of sense. This company would do quite well due to their assets and their income, and that their services are in demand and not easily replicatable. And so for that reason, we, invested in them, and we also kind of trade them. We just got into a trade earlier. Currently up about $417 today on this trade. And we're covering them in our market live session this morning. We also saw a huge surge over on OSSS, that one-stop systems. They're up 175% for us. We did enter over 6 positions this year with over 100% return. Really cool. But really just to preserve the capital, you see this support level here, not really looking to take on any huge risk with this. As we're just getting started the year, we had a really good year last year. We want to just take things kind of conservatively. But we did enter a trade. We had 2 trades kind of going right now. It's Big Bear AI on a short-term trade along with this TSSI. Pretty small position, about 500 shares. So I think we're somewhere around 4,000. Really small position, but up about $400. I wanted to test the waters with this one because they're very volatile. But I might be adding to this position. Don't always want to cut the winners short, let the losers ride, but you want to add to the winners a lot of times. Makes a lot of sense. Contrary to what most people believe, but most people don't end up making a profit, you could say. And so one of the growth markets, AI data center markets, they grow really fast. We recently saw some pullbacks and TSSI is down here. So I do like this potential recovery here on TSSI from about $9 a share to even as high as $20 a share. I think with their current revenues, 200 million plus per year, it makes sense their market cap is at least around 800 million to $1 billion, which from current prices would be a 4x. So that would actually put them, back up into some of these levels that we've seen earlier this year, or last year, excuse me, of, back up into here around $30 a share, something like that. So that's why I'm watching it. But again, higher risk company, still in the growth phases, and not any major big names yet on the balance sheet or on their setup. But that's why we're watching them, as they're kind of helping the conversion for a lot of companies from Bitcoin to the AI markets. So that's why they're there. Interesting. Yeah, shorted. I didn't know that. What's going on, Justin? How are you doing? All right, Carl, how are you doing? Cypher Mining signed a $5.5 billion deal with AWS. Yeah, I'd love to see that. So they're one of the top data center companies to watch as well. They're converting from, look at that. I mean, AWS, they're converting from the Bitcoin mining to, the AWS. And if you were to look at the stock, you would know that $5.5 billion deal with AWS is more than half. Their current market cap's only 6.9 billion. So they've signed a pipeline that's a pretty large portion of their already existing market cap. We have seen them up into that $24 range. So to see them potentially get back up into that $24 range for that company, which is CIFR, if they were to continue, I was actually anticipating a sell down, but I guess they did come out with a big deal with AWS that really pushed them up, and you see them now get some of the deals in the pipeline. So now that's kind of targeting more of that $20 to $25 range where they were at, which is about a 25 to 50%. So again, things change so fast. Like one day, that's why I'm in TSSI, for example. Like one day it's just a data center configurer. Next moment, you got a big contract for them to configure many different data centers at once. And it's, 5x. Like that's kind of the story with a lot of these data center AI drivers right now. So that's really key. Thanks for sharing that. Definitely we'll be following it more and get some more analysis on it. Would love to pull up Prophecy app. I just logged out a minute ago. Hey, Will, what do you see BBAI running up to in the short term? Let's see, Will. Yeah, so a couple things to watch there with BBAI. A lot of people, they have to grow up around, they have to get realistic really about BigBear.ai on the value, right? The returns that we could see with them in the short term. Some people are looking at BigBear.ai and they're saying, $10. We're not even at that point right now. We're at a point with BigBear.ai where it's like, can we see them get up into the $6.50 to $7 range? I'm actually in a trade. We just entered it, BAIG, earlier this morning. Hasn't really moved at all. I don't know if you were there at the live session, Will, but a $20 move. And we're looking for about a 13% increase. I think we got around $4,000 or $5,000 in that position there, but kind of a small trade on a 2x, right? So potentially targeting between that $400 to $500 here in recovery back up here. So you can kind of see that trend on BigBear.ai kind of consistently moving since beginning of the year and trending upward, finding support, rising support here, and targeting potentially up there. Now the risk, do you see why the risk is a little bit better here? You got that risk management, maybe if things don't go according, where you could kind of cut around that 10.50 if things sell down further. But at the same time, you got that potential for profit that's much greater. It's not 3 to 4% maybe you risk, but really what you're looking at is that 15% gain, that continuation up. That's why we're watching BigBear.ai. So we'll be watching it tomorrow morning at market open. Justin says CORC. Yeah, I just saw something related to that. CORZ. I saw something related to that inside of Stockmates earlier today. Some people were talking about it. CORC. I wouldn't touch this company, I don't think. Okay, so I wouldn't really touch this company here, Justin. Even though the market's growing so fast, you kind of see this trend. It looks like they might continue up into that $25 range, which would be really big for them, right? That would be about a 40% increase. I'd actually anticipate they sell down more. But let me see if I remember correctly. Their financials. Yeah. Okay. So it's possible they get some short-term momentum, something like that. Apparently, an investor blocked the $9 billion CoreWeave Core Scientific deal. I don't really know what's going on there, or if they recently had a legitimate deal. We can at least double check. Don't see anything. Yeah, I don't see anything. So let me just kind of walk you through it real quick. A lot of times you don't want to, I mean, you can, by all means, short-term spurts might happen here, but they got more liabilities than assets right now, a lot more. You can see they're holding about $3.4 billion in liabilities. Total assets at just $2.3 billion. They got over $1 billion negative equity, negative $1 billion. So I just wouldn't touch them personally. Companies like that, I mean, you've seen it time and time again. Just happened this last year. There was a company everybody's hyping up. See a lot of articles on this one, for example. But yeah, I just saw a company earlier this year, and I was watching. All these people are telling me about it. Will, buy this stock. Will, you got to look at this stock. I'm buying this stock. People are telling me they're investing a lot in it, and I was like, okay, let me take a look. And they had more liabilities than assets. I said, guys, don't touch this stock. You don't want to look at this one. And it's literally happened twice this last year. One of them was Wolf Speed or something, and they had more liabilities than assets, and they went bankrupt. And we didn't touch them because we said, look, they had more debt, but there were so many hype articles. I don't know if it's the company that does it, and they say, guys, one last spurt, run a ton of PR, like let's hype up the stock so we could sell or something. I don't know what it is, but whatever it is, it's just never good news. It's like there's like a really funny quote, like things that will make you a man broke. It's like from Charlie Munger. I forget what it was, but like one of the main things was like liquor, something else, and margin. Like if I could change the quote, I would say like buying companies with more liabilities than assets, but it doesn't really sound that sexy. But like, you know, I really just, we saw it happen there. We saw it happen with RZLV. You have these like quote unquote deals coming from Business Insider, which has been notoriously known for some fake articles even, but they got more liabilities than assets. You can touch them. You can go for it. See if it works. Incorporated in Delaware as well. I just wouldn't touch it. I wouldn't touch it. That's just my approach. Again, I'm looking for more of integrity companies. We wouldn't even trade short term unless the company checks all the boxes. I don't even mess with the companies if they don't check the boxes. And some of the boxes check, financials, market, real world usage, product, news, value to the marketplace in general, that value makes sense compared to where they're valued. And on top of that, just the margin for profit to risk. Maybe they continue up, but you do see a little bit of overextension on the short term here. You can kind of see a little bit there. RSI, MACD looking a little bit on the overbought side anyway. Potential short-term sell down potentially. And look, I could be wrong. There could be a hype media thing happening where they have a short-term spurt, but again, more liabilities than assets, I wouldn't touch it. So, hopefully that makes sense. Hopefully that's helpful for you. And that's been the focus again for the whole year. It's really treated us well to just have a focus on the making sure that we, stay true to the value. A lot of times the value follows, not always, but a lot of times. So awesome, guys. Appreciate you all. Yeah, I do have some long-term positions in TSSI. John, Zizin PZ. BITF has a virtual conference tomorrow evening. Thanks for sharing with that. Appreciate that. Might check it out there. Chuck says, thoughts on Redwire? Redwire is a really great pick. I've been following them for quite some time. We're very bullish, around $4 a share. I think they're at 11 now. I do have long-term positions. I was able to meet with their executives at the Space Symposium conference earlier in 2025. And you got to meet with all their partners. Air Force Research Laboratory is one of their top partners. And they talked very highly of Redwire for Redwire's satellite technology. Will, thanks, man. Appreciate it. Yeah, of course, man. Appreciate you. Hey, how's Prophecy going? Enjoying it? I hope you're getting everything you can out of it and it's going well for you. Appreciate you as a subscriber there. We've been getting some really good feedback. We've had some 5-figure wins this last week in Prophecy AI. So I hope that's going well for you, Will. Justin, thanks. Not invested in cores, just about Reddit. Yeah, there you go. Just, it's right. You'll read about it. A lot of hype articles, things like that. 14K Bitcoin is what CleanSpark owns. All right. Yeah, I mean, is that a measure of a company's value to the marketplace? That's a good question. I don't touch MSTR for that reason, because MSTR, they sell. Look, it's nothing wrong with it if the goal is to make the company money, but if your goal is to serve shareholders, then it would make sense not to leave your shareholders in a position where they are the liquidity, and every time they buy new shares, you sell your shares so you can go buy Bitcoin. And so just because a company has a lot of assets doesn't mean that they're going to trade at a high price. You can see it all the time in the banking industry. Companies trading way lower and they almost never even reach the quote unquote fair value because, frankly, how valuable is it to the marketplace that they have a bunch of money? Now, it's like, what are they actually doing to serve the marketplace? It's really what matters and why a company would grow. That's why you see a lot of the banking industry, frankly, is having a really rough time. We were even talking about that. We have some executives over in Stockmate. One of them, I believe, worked for 20 years or something at Microsoft. His name's Alvaro. He's also a user of Prophecy app or Prophecy AI. And he came in with an interesting thought on kind of shorting the financial sector because of the 10% cap in credit cards that's going to be introduced most likely here. If that 10% cap in credit cards, I don't know if you guys have heard about that policy, most likely would see a decline in some of the banking companies. And he was looking at the 2 or 3x of the bear of the financial industry. I used to work in the financial industry. I was working at an institution for many years. Or not many years, actually, it was just about a year before I had too much of it. Didn't like it. But I will tell you that the decline is actually quite evident in a lot of the financial institutions because of the openness to the consumers for other avenues, like online banking even has changed the game. Crypto, there's even new banks a lot of people use nowadays, which changes the game. You got a lot of the teller operations now, ATMs obviously, but just like kind of a lot of overhead to have a lot of different locations. And and some people are getting smarter, right? Especially a 10% cap in credit cards. You might see some drops in that financial tech industry. But anyway, that's why we're following. I thought I'd bring that up for you because it was for Common Sense 1851 saying that they own Bitcoin. I'm just thinking, is that actually a representation of how valuable they are, that they hold a lot? I think the value to the marketplace and their service is really what matters the most. I agree, do your research. Otherwise, you can get burned. You also get people to short the stock. Remember IonQ episodes a couple of years ago where an investor group said IonQ was a scam? That's funny. No, I agree. Like, we're long-term investors in Quantum. You can see some of our positions. Rigetti on the right, over 150% over the last few months. But even when it peaked out, we were still shorting it. I actually shorted it. I went to a Quantum conference literally last week, and I believe in Quantum long-term I mean, I've actually met a lot of the executives and I talk with them quite often. And some of them CEOs, some of them are running the companies. And I'll tell you, the reality is that quantum's going to be growing in the future, but it was way overextended earlier in 2025. So even as a long-term holder, I was shorting it, So it doesn't necessarily mean that just because things like overextend, they happen. Sometimes a good way to hedge against it is to short it. It's a little more risky. It involves a little more of attention to what you're doing. And if it does keep going up, you don't get to have any of those gains, obviously. But if you do have some good timing, it can save you a lot and conserve the capital. Keep the nest egg big. Michael, appreciate it. Thanks for tuning in here. It's been on a run, Redwire, so I wouldn't be surprised a slight correction there. Appreciate you all. Thanks so much for tuning in, guys. Lone V. Hey, I don't know if you saw my comment on SoundHound. Yeah, it's been a little bit. So SoundHound, they have a nice moat going on. They got early to the AI space for the voice AI, and they partnered with Jeep, Fiat, BNP Paribas, GoDaddy, Hyundai, all the top companies, Little Caesars, Panda Express, Chipotle, for the AI voice. You can see them at some of the drive-thrus in the hospitality or restaurants, healthcare, finance. The only thing is, I don't think they actually have a moat. I think they're actually at risk because it's becoming easier and easier to develop AI voice apps. I even have it to where for our company at Prophecy AI, we've created our own AI voice that knows a knowledge base and can help customers. Some of you guys have called it. And so revenue, actually was flat last quarter and dipped. Okay. And so I don't know why it would get a lot of attention, but balance sheet looks good, 400 million, but revenue 42 million, and they're at $4.86 billion in market cap. I think they're overvalued. In fact, I don't think that they're going to keep up this trend. It's possible, but I think they're going to see some corrections. It's possible they continue up. The trend would indicate from a technical perspective, from a financial perspective, they still look very largely overvalued. They're burning through 100 million a quarter. They only have 300 million in equity. They do that 3 more quarters. They got to keep raising money. And in the AI market, with software being what it is today, there's no excuse. I believe there's no excuse for AI companies to not be at least break even. I mean, if they're tremendously investing in like massive infrastructure, then I understand it. But for an AI software company that's in this, it doesn't make sense to me. I wouldn't touch it. I think they're overvalued. I think they're going to sell down more. And I could be wrong. I've been wrong in the past, but that's my approach. I was very bullish on them back in 2025. In fact, their earnings into early 2025, they came in with positive net income and revenue about the same almost as they're at now, which 120 million in positive net income looks really nice. Their last quarter, though, they were negative 109 million. So almost a $200 million swap to being negative, which again, from a perspective of that volatility and their current market cap of 4.8 billion, they lost 100 million last quarter. I'm just a little more skeptical. I wouldn't enter anything in SoundHound. I used to. I had some long-term positions actually. I actually ended up selling some of them after I saw some of the recent earnings. But again, I could be wrong. Just something to keep up with. And I really do appreciate the mention on that one. Common sense is they will lower the cap on the credit cards, but increase your limit by 10x. If they do, I need to get some credit cards. Phantom Thrifter, ADA lawsuit against AMD could make ADEA blow up. Interesting. We'll take a look there. ADEA. Thanks for sharing. Appreciate you all. Thank you so much for tuning in, guys. I got to hit the gym. Actually, it's getting late here, so I do have to go. I appreciate you. Thanks so much for tuning in. If I earned your thumbs up, hit the like button. Again, if you guys want to see our trades like we just had this morning, we're trading BigBear AI along with this TSSI trade. We're up about $400 so far. I Been crazy. But again, we're there every morning at Market Open. If you ever want to tune on in, it's going to be the second link in the description down below to join Stockmate. Not only do you get the community, the daily live trading sessions, and the New Year's, it's a huge sale for this January here. You get the live trading happening in 12 hours, but you also get a free t-shirt. I'll send it to you anywhere in the world. Would love to see you there at Market Open. Appreciate you all. I'll see you guys in the next one. Take care.